Welcome everyone back to Pete's Investing. In this special edition, I'll be covering a brief overview of the defence stocks and how they performed during the 20-year Afghan war. As always, click on the subscribe button, the notification bell, and like the video to support the channel. Let's review the channel playlist first. Make sure you go to the share review indexes playlist as well, and also the strategy playlist. That's where we include all the videos for the strategy we follow. As always, we're not offering financial advice. This is purely an educational video series. Let's get started. So during the year, President George W. Bush signed the authorization for the use of military force in response to the 9/11 terrorist attacks. If you had purchased $10,000 of stock evenly, divided among America's top 5 defense contractors in 2001, and held that stock, it would now be worth over $53,000. So these are the companies there: the Boeing, General Dynamics, Lockheed Martin, Northrop Grumman, and Raytheon. So if you invested just about $2,000 in each back in 2001, you'd be returning about $53,500 today. And that's the return on the book cost. This is our strategy that we follow, with the exception of Lockheed Martin and Northrop. The others outperformed, all the other returns were outperforming the buy and hold strategy, and we'll talk about that in a bit more detail. I've also included here the current dividend yields, what they're paying today, as well as the results of the buy-sell strategy that we use. Now, these numbers suggest it is incorrect to conclude that the Taliban's immediate takeover of Afghanistan upon the US's departure means the Afghanistan war was a failure from a purely performance perspective, if that's what you want to look at it. On the contrary, the perspective of some of the most powerful people in the US, it may have been an extraordinary success. Notably, the board of directors, all of the 5 defense contractors, include retired top-level military officers. So again, let's not get too political, but it hasn't been a complete waste for some people. So let's go now to back to what we're looking at, and it's the charts. You can see the impact of the 2008 global financial crisis, how it impacted all companies. Likewise, how they were impacted in 2020 during the COVID crisis. All companies except Boeing have recovered to about pre-2020 COVID levels. So if you look at, let's zoom in here, they've all recovered back to pretty much to pre-COVID levels, with the exception of Boeing. Okay. Remember, with the exception of the major downturns during the GFC and COVID, these stocks had steady gains over the years. Most stocks on the world markets tend to trend sideways, and even downturns for extended periods of time, months and even years. Our strategy works well in such markets, and please reference the weekly videos for samples of that performance. So let's just go back to our table of results. You'll notice Lockheed Martin and Northrop, the buy and hold approach, outperformed our strategy. And that's because if you look at the share price of those, Lockheed Martin, the red one, and Northrop, the blue line, it's more of a consistent uptrend, whereas all the others had somewhat of a downward market. You can see here, Boeing and General Dynamics and even Raytheon had a bit of a dip here, and that's probably what caused our strategy to outperform the buy and hold strategy. Again, most charts, most companies on the share price of their share price doesn't do this. It all generally adjusts and comes back to some sort of level of sanity. In cases of COVID or GFC downturns, pretty much every company is going to feel an impact in almost 99% of cases. But as one of my rules, we look at trading companies which are good blue chip companies and pay a decent dividend, which supports our holdings in volatile times. So again, our strategy pays dividends. You can see here, Boeing's not fantastic, but they pay something back, probably something similar or at least better than the bank would pay back in downturn times. Let's look at our individual charts. You can see here general dynamics, the first one off the rank. Okay, this is the one, you can see here the dips where we bought multiple contracts. This is the share price. And this is our profitability chart. You can see here that during the dips, when it came back, it paid a nice little gain from where we started from in terms of profitability. You can see there the share price was lower where that closed, although our profitability was higher. Okay, that's part of our average down strategy. Likewise here, the share price was lower than where it started. Our profitability was higher. And again, I won't go into technical details of how the strategy works, other than to say we're using a CCI 14 on a daily basis. And we're looking at adding positions when it reaches about 10% down in the down market. Let's look at Lockheed Martin. Now, Lockheed Martin had a more consistent uptrend, and that's where the buy and hold strategy outperformed our strategy. But you can see here that still returned nice little return, and the total return was 89.53. And it did happen, and also added to positions here where it went the price went sideways for a while, and our profitability was advantageous at the end of it at each of these points. There were multiple entry and exit levels throughout this period. And I'll drill down on some of these. You can see here, entered a position here on the average down strategy, entered another position there, and a third position there before it closed out there at a nice little profit. Closing out at a profit there, about $8,500, 8,459, from a starting point of profitability 7,277. So about $1,200 made during those months. Let's quickly go through these. Northrop, very similar approach. We average down, sideways market, average down, sideways market. And this is where nice entering and exiting with single entries without averaging down. Let's look at Raytheon. Again, averaging down in these little dips. And in cases where the market is going sideways, that's where we're getting our dividends, if we're holding that position at the time. And lastly, Boeing. You can see here Boeing had a nice fall in share price during COVID and also during the GFC. We added to our positions, but you can see there the profitability gained and the profitability gained as well during COVID. So again, it's just a quick summary. Again, don't forget to hit the subscribe button, the notification bell, and like the video to support the channel. Speak to you guys next week.